you so much for watching. It's showtime, everybody. Showtime. It's Sunday, 4 p.m. Central in America. Thank you guys so much for tuning in and watching Angelo Christian Mortgage Live, our YouTube podcast, Where America Goes for Funding for the last 20 years. We are a YouTube channel dedicated to educating people on finance, mortgage, credit, real estate investments. And not only, are we a YouTube channel, but more importantly, bigger, we're actually a direct mortgage lender. We're a mortgage company. We specialize in all different types of loans: commercial, residential, hard money, jumbo loans, no-doc loans, construction loans, VA multifamily, FHA. People have been contacting us. I've been serving America for almost 20 years and literally helped, thousands of people to get loans all over the country. Whether you're in California, Florida, you can call or text our office at 832-431-6331. We want to be here to help you with your mortgage financing needs. So, and then I do this live show because we're winding down, getting ready for the holidays. We changed the schedule a little bit. We normally do it Thursday, 7 p.m. Central. Today we're doing it on Sunday. We'll be back again this Thursday, 7 p.m. Central, right before Christmas Eve on the 23rd. That'll be our last Talk with Angelo for 2021 because I'm going to be leaving on vacation and I won't be back until next year, January. So that'll be the last Talk with Angelo that I do for this year. Will be next Thursday, right before Christmas Eve. But today I have a lot of stuff I want to talk about, a lot of interesting topics, and I want to hear your comments, your questions. So if there's anything that you want to talk about, please don't be bashful. You can ask me any questions that you want. This is an open forum. Please don't forget, guys, give us a big thumbs up on the YouTube. We need your help and your support. If you know anyone that wants to learn about, mortgage, that wants to learn about finance, share this information with them. So yes, please, thank you, Carl, for reaching out. We really appreciate you. Thank you so much for watching the show tonight. You can ask me any questions that you want. I have a lot of stuff I want to talk about tonight. I have my checklist here, my list on my notepad. I've been using my notepad for my whole life and my journal. And I always have things I want to go over. So I have some important stuff I want to talk about tonight. But I also want to know your feedback and your comments. And there's a lot of new people that watch our channel. We produce 4 videos every single week. Monday, Wednesday, Friday, and Saturday. They come out at 6 o'clock in the morning. Thank you so much for watching the channel. We really appreciate you. And then we also have our Instagram. Our Instagram is official Angelo Christian. Our YouTube is Angelo Christian Mortgage. So, that's where all of our social media is at. We have our website, official Angelo Christian. You can go to our website. Again, we are a mortgage company. We're a lender. We're not a marketing company. We're not a credit repair company. We're not a YouTuber. We just do YouTube to, as our way of expressing and connecting with our customers, with our partners, to spread the message, to teach people, to educate them on loans, credit, finance, real estate, all of that stuff. So you can look us up. We have excellent reviews on Google. You can look us up. We have over 400 reviews on Google. If you just Google Angelo Christian Mortgage, my name pops up. You can see everything. So we're legit. We're the real deal. That's why I'm here. That's why we do what we do. So I come here talking to you live, completely transparent. So anyway, a lot of good stuff happening in the markets right now with real estate. I don't know if you guys just saw, FHA just came out and announced last week they've increased the loan limit from $356,000 all the way up to $420,680. So that's a massive increase. They followed right behind Fannie Mae and Freddie Mac, who just increased their loan limits by nearly $100,000 as well. So, and it's interesting because you saw in 2021, real estate prices skyrocketed. I mean, I've never seen real estate jump 20% in a year like this. It's been insane. So what's happened is the agencies, Fannie Mae, Freddie Mac, FHA, they've had to respond to that increase because house prices have risen so much, they've had to raise the loan limits. It's gone, oh, you're welcome, Carter. Thank you so much. So it's gone so high. They've raised the loan limit so much that, sellers, realtors, home builders, so they've had to increase the loan limit. So what does this mean to you guys out there? You can get an FHA loan right now, and with a loan amount, that means the loan amount's $420,000, not the purchase price. So that would theoretically put your purchase price at $435,000. So $435,000. Jermaine, I'm going to answer your question. What's the best rate I can get today? I'll answer all your questions here too. So, basically, if you're trying to get an FHA loan and you're in an area where before the price of the home was over $356,000, you can get an FHA loan now up to $435,000 for a 1 unit. Now, obviously, if it's a 2 unit, a 3 unit, or a 4 unit, you can go up to a higher purchase price. I'm just talking about a single family unit. So 1 unit for FHA, 1 single family home, the minimum loan amount has gone all the way up to $435,000. When I first started this business, the FHA loan limit was $130 grand. So it is risen massively, and that's great. I'm very happy that they're doing that. So if you guys are trying to get an FHA loan, you can lock in for 2022 with the higher loan limit up to $435,000. You can get a fourplex with FHA up to over $1.5 million in some parts of the country. Not everywhere. Some places is like $1 million, some places like $900,000. So I'm just really happy about that because the government is responding in a positive way to help people to be able to get affordable financing. So so that's really strong for FHA. Remember, conventional about a month ago raised their loan limits up to $647,000. That's a huge, guys. I've never seen increases like this in my life. So it's good because you can get great interest rates, low down payments, and it makes it more affordable for all of us to be able to buy a home. So if you're previously looking to get an FHA loan or conventional loan and you couldn't because the purchase price was too high, now might be a good time for you to think about getting a conventional or FHA loan because of the loan limits going higher. So be mindful of that. And if we can help you, we specialize in conventional FHA. Call or text us. You can call or text us at 832-431-6331, or in the YouTube description. Do you, off topic, Ty, take apprentices, your office just passed a SAFE exam? Yes, I'm going to talk about recruiting and hiring. Yes, we are always looking for great talent. I'm actually, we are looking at expanding aggressively. And looking for loan officers, loan processors, mortgage underwriters, loan officer assistants. The apprenticeship program is a mentorship program where you'd come in as a loan officer assistant and work your way up through the ranks, become a loan officer, then you can become a sales manager, a branch manager, all of that stuff. So absolutely, Ty. Please, if you're curious to learn more, shoot your resume over to us. You can shoot your resume over to Angelo at chihomeloans.com. Again, that's Angelo at chihomeloans.com. We're always looking for great people to add to the team. We're always looking to expand and grow. Our team is everything. My team is everything to me. So I care so much about my team, and I know that I couldn't be here today if it wasn't for my team. So I'm very big about building people up, helping people to realize their goals, to scale, to achieve their highest potential. So, careers and building people. The thing that's great about real estate is it's really an uncapped income opportunity. And it's so good because you're helping people to buy their home, get financing, and you can get rewarded very well for it. So it's just an awesome thing. So I'd be pleased and honored to be able to help and serve you. So we specialize in commercial, Brandon. Absolutely. We specialize in multifamily. We have multifamily bridge loans, multifamily agency loans, multifamily bank loans, multifamily construction loans. So we love to do multifamily, so reach out to us. We'd love to talk to you about it. If you have any questions about multifamily today, please let me know. So I want to go back and answer some of the questions. Someone asked, what's the lowest, someone just asked a question, what's the lowest interest rate you can get right now? Thankfully for you asking that question, rates have come down a little bit in December 2021. In September and October, interest rates are higher. Now they're a little bit lower. So theoretically, and I can't tell you what your exact rate's going to be because we haven't done an application with you. What I can say is that 30-year fixed mortgages, they're starting today at 2.875% fixed for a 30-year fixed, and 15 years are starting at like about 2.5% fixed, and 20 years is about 2.75 for a 20-year fixed mortgage. So obviously your rate is based on your credit, the type of loan program that you're doing, how much you're putting down, all that stuff. So the type of, those things vary drastically. It will determine what you can get approved for. So, but those are the going rates right now. So, and that's one of the big things that in 2022, what we're going to be watching very carefully is what is going to happen with interest rates. There's a lot of chatter right now, a lot of speculation going into 2022 about where the market's headed and what are interest rates going to look like. If you ask me, being a betting man, that I do think rates are going to go up. I think that inflation is going to be here to stay. I mean, Ray Dalio, who's one of my mentors, who I look up to and value dearly. Hey, good evening, Pink Lady. Thank you so much for tuning in on Sunday. So Ray Dalio is saying that inflation is here to stay. So if inflation is here to stay, that means that interest rates will go up higher. So they're lower right now. So I would say right now is a darn good time to get a mortgage to buy a house, because what you don't want to do, and I don't know if you guys, everyone watching this show is old enough to remember, when I first started in this business, the 30-year fixed was at 6%. So being able to get a 30-year fixed at 2.875 is unheard of. I was doing loans for people at 6% interest. So and there's been times in the 80s when a 30-year fixed was 15% interest. Can you imagine that? Can you imagine a 30-year fixed mortgage at 15% interest? That's insane. But there was a time when that happened. I don't think we'll ever see that again in our lifetime, but I don't see why we wouldn't see a 4% or a 5% 30-year fixed mortgage again. And I'm not saying I want that to happen. I don't want that to happen. I like low rates. I own a mortgage company, so I want to see low rates. But at the flip side, I don't have any control of that, and it's just the way things are going with the economy. There's shortages everywhere, from furniture to automobiles to housing, employment. So I'm looking around, I'm seeing what's happening. So I wouldn't be surprised if we see interest rates go higher in 2022 and in the long term. So just be mindful of that. When the takeaway is that if you're thinking about buying or thinking about getting a loan, think about doing it sooner than later, because you don't want to, if you can get a 2.8 versus a 5% fixed, it's a huge difference in the interest, huge difference in the payment. On a $300,000 loan, the difference between, let's just say 2.8 and 5%, that's the difference of $600 a month in your payment. So that will impact you significantly on what you can qualify for with your debt ratio. So I want you to be mindful of that, because if you're kind of thinking about, oh, well, I don't know if I want to buy. Look, the government's increased the loan limits, interest rates are low. What else do you want to buy a house? You don't want to wait until, there is a recession, and then the lenders don't want to do loans, and then you don't have a job, or if interest rates go higher, those are worst case scenarios. So I think it's a great time to buy. The question, obviously, for you guys out there, can you find a home that you like? And I know that's a big concern for a lot of people right now, because there's not a lot of inventory out there in the market. So that's why one of the things that we're doing and we're getting ready to roll out, which we've started to for 2022, is construction loans. Because I think construction loans are incredible packages for people to be able to buy their land and build their home, and they don't have to wait for a builder to supply inventory. They can just go buy their own lot and start doing construction right there. So I think that's something that I'm very excited and passionate about. And if you want to, if you've ever had the dream to build your own house, it's an awesome undertaking to participate in. A lot of people, their dream is to build their home. So construction loans are a great program. And if it's done right with the right builder, you can build a beautiful home and also have a lot of equity in the property, because usually you save a lot of fees by not buying retail. So construction loans are a really, really interesting thing that I'm very fond of. So anyway, you do, but the steps is a bit confusing. Well, that's why we're here, Brandon. We're here to help you, to educate you and hold your hand and walk you through it. Hey, Charmaine. Yeah, Charmaine's probably very low in Hawaii. Yeah, I bet. So, we do construction loans, and I would recommend thinking about, doing that, because I think that, if you want to buy and you're not seeing what a lot of times we hear every week from people, several hundred times a week, is I can't find a house, can't find a property. It's a bidding war. 30 people making offers, cash offers on the house. I can't find what I like. It's overpriced. Well, what about, is there any vacant land? Is there a piece of land that you can buy? Maybe there's a floor plan that you like, and maybe you want to do that, and you can do that. We offer construction loans. We have construction loans up to $3 million. So that might be something that it may not be for everybody, but I think that for a lot of people, construction loans make a lot of sense, and we're a big advocate of it. So, and if you want more information about construction loans, on our YouTube channel, we provide. Hey, thank you so much. We appreciate you. Thank you, Ange Haas. That's so kind of you. That's so sweet of you. We really appreciate you watching the channel and giving us all your support. So if you want more information on construction loans too, we have a lot of content on our YouTube channel on construction loan, or you can reach out to our office, at 832-431-6331. We love to talk to you more about construction loans and love to help you. We have a minimum construction loan amount. The minimum is $200,000. But the cool thing about it is that you can buy your land, build your home, and it's just, to me, you save a lot of money and you don't have to wait for a builder. So anyway, those are some of the things I want to talk about. The other thing I want to kind of go over with you guys, a big topic that I want to discuss, is closing costs. A lot of people, they always ask me, Angelo, how much are closing costs? Why do I have to pay closing costs? I hate closing costs. I don't want to pay closing costs. So I want to kind of talk about this a little bit to explain what exactly are closing costs, how much are they, so that way I own 112 acres of land in North Carolina, as we're considering building a house on some of it. Is that, Carl, is that 12 acres or 112 acres, Carl? I didn't see that. Was that 12 acres or 112 acres? So yeah, see, that's a perfect example, Carl. If you have all that land, you could build some houses on there and sell those to people and help other people so they could buy their home. Okay, so you have 12 acres, so you could build homes and it would be good. You'd be helping people to buy a house. North Carolina is a beautiful state, and there's a huge shortage in North Carolina for housing. So you could use some of that land, to build some nice homes for people, and then you could also make some money. So it's a win-win situation. So, and we're doing that, and we're a big advocate of it. I think it's a great opportunity. So it really is. It really is. North Carolina is a beautiful state. We do a ton of lending in North Carolina. I think it's a gorgeous state. So, anyway, so going back to closing costs. So closing costs, when you're not sure, we can help you to go over. I mean, the thing is that, and I'm going to talk about this tonight, is preparation. That's one of my things on my list tonight, is preparation. The key to success in real estate funding is you have to have a solid plan. You have to be prepared, and you have to be organized and have your ducks in a row. Like, you have 12 acres, that's great, but that on its own is not going to get you to the finish line. There's things that you need to have in place in order to put all this together. Obviously you need money, you need a lender, you need a builder, you need obviously a vision, you have a dream, you have a goal, all that stuff is great, but there's realistic components that have to back it up, cost budget, floor plans, sewage, all kinds of things, plumbing, and you have to work on putting that whole thing together, right? And so, I don't know if the area that you're building in has roads or amenities, but those are things that come up, and people want that stuff, but the thing is that, the first thing is putting together a plan, and then if you're going to build, having a cost budget, and then getting funding for it from a lender like us to help you. So, it can definitely happen. It's just you got to put in the work. and you have to work with the right people, align yourself with the right group, the right network, so you are successful, so you can do it, okay? But anyway, going back to closing costs, closing costs is just like when you do any transaction in the universe. Whether you go to buy, a water or Topo Chico, you pay taxes. You have to pay for that water. Whether you go and you have a service done in your house, a painter come and paint your house, you have to pay for the service. So when you're buying a house, let's just say you're buying a $300,000 home. Well, there's like 20 different services that are connected to that to get that loan. You have the title company, you have the insurance company, you have the appraiser, you have the realtor, you have the lender, okay? Right? And then it's some states you have attorney, there's an attorney you have to pay, right? There's an inspector. So all of these people, they're all doing something to help you, get your house, get your loan, right? So it doesn't matter if it's a multifamily commercial, it doesn't matter if it's a rental property, whatever it is, there's all these parties that are working on your behalf to get you the funding, and they got to get paid, right? Everyone has to get paid. Everyone has to eat. Everyone has to. So, and those closing costs, they all stack up because it's all due at one time at closing. Typically, closing costs, on average, I'm just going to give you an average, is about 3% of the loan amount. So if you're doing a $300,000 house, you could have closing costs of $9 to $10 grand easy. And you're going to have, usually your title insurance is usually about 1%. That's $3 grand right there. Your lender is about $3 grand. Your insurance for your home is about $2 grand. The appraisal is about $500. The inspector is about $350. The attorney is about $500. Right? So you got to pay all this stuff. And so don't be, in some states it's even more. In the East Coast, like New York, the closing costs are usually like 6%. So because you have a lot of transfer taxes, you have all this stuff with attorneys and legal stuff in Connecticut, New York, Rhode Island, New Hampshire, it gets expensive. So you're going to have to pay those closing costs, and they're real. So there's not going to be any hiding those closing costs. Now, there are ways to work around getting those closing costs paid if you don't have the money to pay that on top of your down payment, because that's completely separate from the down payment. Your closing costs have nothing to do with your down payment. All I'm talking about is closing costs right now. In addition to closing costs, you also have a down payment. If you're buying a $300,000 home with FHA, the down payment's 3.5%. That's another 10 grand. Conventional, it's 5% down. That's 15 grand. So the thing is that with closing costs, there's things that you can do. You can ask the seller to pay them. But again, in the market that we're in right now, a seller's market, they're not going to pay the closing costs. Most likely they could, but it could be tough. You can pay them yourself out of pocket, but a lot of people complain that, well, I'm paying the down payment. How can I pay the closing costs too? That's too much, Angelo. So the third option, and that's a thing that we're famous for at our company, is getting the closing costs rolled into the loan. So that's the thing that we do a lot of. So what that means is that if the closing costs are $10,000 and the purchase price is $300,000, you can tack that $10,000 on the back end on the loan and make your loan for $310,000. So that way you don't have to pay out of pocket for the closing costs. Now we allow for that. We have no problem with that, to do that. A lot of lenders do not do this, and they will not allow it. They'll make you pay the closing costs and the down payment. Our thinking is how can we help you? How can we reduce your out of pocket? And that's one of the things that we do. We roll those closing costs into the loan to help you to lighten your load on your cash to close. Because we know that buying a home and doing the loan is just the beginning. You got to move into the house. You got to furnish the house. You got to maintain the house. So you got to do all this stuff. So we try to figure out ways to help you, and rolling the closing costs is a great way to help you to reduce your out of pocket, because it's expensive and we get it, and you're not made of money, and so it's just another idea that we do to help you to reduce your out of pocket expenses. So those are generally what you're going to be seeing for closing costs around the United States, and just be ready for that. I don't want you to get sticker shock and say, whoa, what's all this? Why am I being charged all this? Because it's something you have to pay. It's customary, it's normal, it's part of the process when you're buying a home. It doesn't. Do you have a source of funds for closing costs? Do you have, okay, it's Veritas. You do have to source the funds, Veritas. So when you're getting the loan and going through the underwriting process, they check your bank statements, right? The underwriter goes through your bank statements, and they want to see. And I've done a lot of videos on reserves, documenting cash to close. You're getting your bank statements ready. They're going to want to see where the money's coming from. Yes, absolutely. They're going to want to see, and you got to be ready for that. One of the things that is very, very important, and we keep talking about this because, I mean, I know I do this for a living. It's my career, and I try not to take that for granted when I talk to people. But we see people. That's why we do these shows and these channels and all this, because we're trying to teach you guys so that way you are successful when getting a loan and buying a house. Because I promise you, I mean, in just my office alone, there's about 1,000 people a month that have no clue that contact us about what's going on, what's the process of buying a house or getting any type of loan and showing proof of funds and having the money for closing. And they're completely oblivious and clueless on the process, and that's okay, but that's why we're here to walk you through and educate you so that way you are aware of what you need for closing. You can document those funds. You don't have an issue. What you do not want to do, and I'll keep repeating it again and again and again, that, if you're going to buy a house, you have to get prepared a minimum of 2 months prior before you do the application, right? And have a consultation with us so that way we can figure out what's the best way on how to structure your loan. Because if you don't do that and you blindly just go under contract to buy a house, you're probably going to lose a lot of money, because you don't know what's going to be asked of you and expected of you through the loan process, and it's going to get too intense. And for you to go and even put a contract on a house, you have to put up earnest money. Usually you have to put up 1% down when you sign the contract. So if you're buying a $300,000 house, the realtor is going to require you put $3,000 down. Now, that money is non-refundable if you don't close on the house, right? So I'm trying to tell you guys this stuff so you don't lose your money, right? And your time. And then also your dreams that you thought you were going to buy that house, because the seller is not going to wait for you to figure out your loan. He wants his money. He wants out of that deal. So we got to quickly, get yourself, and the underwriter is not going to close your loan until you meet all the requirements. There's a lot of requirements that you have to meet when getting the loan. And the underwriter doesn't care about, well, I have a moving truck, I got to get the kids in school, I got to get out of my current house. They don't care about any of that. The only thing they care about is, did you satisfy the list of requirements to close on the loan? And this is a very, very important thing, because we see it like at least 1,000 times a month where people are just like, oh, I didn't know I need to have bank statements. I didn't need to know I had to have my credit right. Put the proceeds, plan to use the money to put down on. Okay, so you sold your house and Carl, you're comparing investing in an index fund or doing spec homes? I want to make sure I got your question right. That kind of came up kind of fast. So what is it that I want to make sure I understood? What was your question? Because I want to make sure I answer that right. You're comparing doing index funds versus building homes. Is that right? Just let me know if that's correct. Or what is it tell me your question, because I want to make sure I understand it. So, but anyway, so preparation is very, very important, right? And so, I've done many videos on getting prepared, getting ready, investing the proceeds in index fund. the thing is that, there's a lot of, and I appreciate you asking me that, and even considering me as somebody to ask. Um, the thing that I would say is, a lot of it's going to be relative to where you are in your life, what you're trying to accomplish, how much risk you're willing to take. Obviously, index funds, in my opinion, you're going to have a lower return, less risk. Yeah, you're gonna make some money, but I mean, here's the thing. What I would tell you is that if you invest in index funds, all right. Thank you, Don. That's very kind of you, man. So I wish that's so the thing that I would say is, if you're going to invest in index funds, I would not have high expectations about how much yield you're going to earn. Thank you, Donald. I appreciate you, brother. Thank you, man. So, because, the thing is, what is the average return on index funds historically? And, to me, I'm, seeing the markets rise, how much they've risen in the last decade, me personally, I'm very concerned about that. The market hasn't had a downturn, or we haven't had a bear market since 2008. So, I mean, we've had some, minor adjustments and stuff, but nothing crazy. Now, long term, yeah, it's better than what the bank's paying. I agree. But see, that's the thing. I don't know where you're at. I don't know how old you are or what you're trying to do. If you're just trying to make some extra money, or you need that to live off of, or you're trying to get rich, or you're trying to build a business, so it depends. Because building houses, obviously you're going to make way more money doing that than index funds. There's no question. But that's assuming that you know what you're doing with building houses. Right? There's so many laws and codes and rules when building homes. You got to really, really know what you're doing. Obviously, if you have a business is going to make more money than index funds if the business is viable and is doing good. Now, if the business is not doing good, then you're not going to make any money. So I would say, I don't know what your risk tolerance is, how much risk you're willing to take, how much money. Okay, yeah, then you could do that. That's not a bad idea. I wouldn't put all your money in there, Carl. I wouldn't put all of it in there. I would say put some of it in there. Let it ride. Let it see. I think long term, index funds. If you're thinking about long term, 40, 50 years, 30, like Warren Buffett style. You're thinking 30, 40, 50 years or whatever. You can't go wrong. Long term, you can't go wrong. But if you're talking about the next year that you want to make 100 grand off of index funds, I don't think it's going to happen. So, I don't know what you're, if you're just trying to make a little interest on the side, I don't think it's a bad idea, but I think it's also index funds is usually a long-term thing. That's usually a long-term situation. Warren Buffett is the preacher, the master on investing, and his whole thing is long-term investing. The thing is, it's funny, I bought, Amazon. Yeah, it's better than the bank. I'm not trying to knock you in any way. It's great that you're trying to do that. I just, one of the things that I think that, and I have one of my employees that he got into trading, and he thought he was going to make all this money. And he works for me as a loan officer. And I told him, this is what I told him when he first started. I said, man, listen, okay, I've been trading and doing lending and mortgage investing my whole life. All right, you're trading. You can't. It's very, very difficult to make an income off of trading. Right? It's not really a career where you're guaranteed like a salary of $5,000 a month. Some months you're up, some months you're down. It's there for building wealth and building your net worth. but don't expect to make an income off of it. And, I said, look, there's been times when I've been down big time trading. And anyway, he didn't listen to me, and he spent more time doing trading than doing lending as a loan officer. And he did really good for about 3 months as a trader. And he went and bought all this stuff, and he thought that was going to be his new career, his new life. And then about 2 months later, he got wiped out of his account. All right. And then he came back and worked for me, and he told me how sorry he was that he didn't understand what was going on. And it was a rude awakening for him to have him lose all his money trading. And I said, look, I told you that, this can happen. This is exactly what happens to a lot of people. I had a friend of mine that was a professional trader, and he did very well. He was very successful. And I hadn't seen him. This was a long time ago when I first got out of college in 2004, and then we split ways. Like, he moved off to Chicago to work at a firm, a prop firm, a hedge fund, and I started my business, building my business. Anyway, I was in Chicago about 3 years ago at an event, a mortgage event, and we ate at a steakhouse there. And lo and behold, Frankie, who was the guy that I'm talking to you about, was our waiter. And I couldn't believe Frankie was our waiter. So, and I said, Frankie, what happened to you? And he said he lost all of his money trading. And he filed bankruptcy. And so the point I'm trying to make is that obviously that doesn't happen to everybody. There are very successful investors, very successful traders, but you have to really know what you're doing. I've been doing, mortgage lending for 20 years, so I know what I'm doing, right? So the bottom line is you have to really, really know. And what I'm getting at, Carl, is that, don't follow the herd and just throw some money in a pot and hope it grows. Just be cautious and be smart with your money. You made some money on the sale of your house. I know you're thinking about getting in some stuff, Bitcoin, all these things going on. You gotta be smart, and really know what you're doing. So I think if you're planning on doing it long term, it's not a bad idea, because the markets have proven over the long term they've always gone up. Obviously, the entry point whenever you go in is very important. The markets are very, very high right now. There is a lot of concerns going into 2022. So just think about all that, okay? Because I don't want you to lose your money. And I can only tell you from my experience, being in the markets and trading and investing my whole life. I'm no Ray Dalio, but, I think he would tell you something similar. And he does a lot of index investing. That's a lot of what his funds do. And I think if you think about that, I think that's okay. So I hope that helps answer your question and gives you some insight. And I got to commend you for. It's great that you're thinking and about doing something with your money and investing. I think that's a great thing, and you need to be doing that. That's how you go to the next level with your life. Just be smart is all I'm saying. Just be smart with it. Think about it. Try it in a little bit. Put a little bit of money out there and see what happens. Don't do your whole. Don't bet the farm on what you're. And see what you think. Another thing that's also really good, what I would say is that if you're looking to, learn a new space like investing or home building, the key, a very important thing is, working with somebody that's an expert in that space so they can point you in the right direction. Like the guy that in the beginning of the show said, do you have an apprenticeship program? That's why we offer mentorship program with our real estate university, is so we can teach people and show them, the way on how to do well, how to be successful, and not make mistakes. Because it's better if you have a straight line to where you want to go versus going in circles, right? So we teach you that, with our mentorship program. So if you want to build houses, partner up with somebody that really, really knows what they're doing, that you can trust. you know? So that would be my advice to you, Carl. So, Brandon, yes, we do commercial loans. We specialize in commercial. We have commercial. We do, Brandon. So we have commercial loans, hard money commercial loans. We have bank commercial loans. Yes, it's my pleasure, Carl. Yeah, just take some baby steps, man. I'm proud of you, man. That you're doing good. That you're out there putting yourself on the line. I'm really proud of you, man. That you're doing good. So, yes, Brandon, we have commercial loans. We have hard money commercial, agency commercial, bank commercial loans, bridge loans, a lot of different commercial loans. It depends on what you're trying to do. Like if you're trying to invest in multifamily, the biggest thing I would say is that we deal with a lot of first-time investors that want to buy their first rental property. You know, I don't think there's anything terribly wrong with starting small. What I mean by that is, you know, if you want to buy one rental property, you know, just to kind of see what's going on. Now, if you have the ability that you can partner up with an expert or build a partnership or a network or a syndication, that would be preferred, where you can purchase a very large multifamily deal, let's just say a 200 unit deal. Now, obviously a 200 unit deal could cost $50 million, whatever. Yeah, I know you may not, people watching the show may not have, you know, $10 to $15 million to put down to buy that, but with a group of partners you could, and you'll learn a lot, and that will make more money than just one little house. But if you don't want to go down that road, there's nothing wrong with buying one rental property to learn the process and then slowly build your portfolio. I have clients that started off with one door, and then they have over 5,000 doors today, and they built their portfolio over decades. So you know, there's a lot of ways that you can do it. Yeah, so like you're looking at a 10 unit for $350K. That's going to be, that space right there is tough to get funding for because the loan is very small per door. I would say look for $1 million plus deal, because it's hard to get lenders involved with $350,000 with 10 doors, because that's $35,000 a door. It's probably not going to be a good investment, you know, because something doesn't make sense about, you know, 10 units for $350. Usually 10 units would be about $750 to $1 million minimum. So there could be something wrong with the property or the location or something. It sounds like the location may not be good, or the rent or the tenants or something, because whoever's selling a 10 unit for $350K, that's unusual. That's an unusual situation. So, you know, I would say it's maybe an older C-class building or D-class, or there's something not right with the location. Because the good 10 units are going to cost at least, you know, like I said, $750 million plus. And that's going to be, because the location's critical for multifamily. Okay? You want to be near, you know them okay. I mean, listen, I'm not saying that it's not a bad deal. I think you need to look at that with a laser microscope, because you want to make sure that, you know, and because the underwriter that does the loan is going to check everything anyway. They're going to check, do an appraisal, do an inspection, check the tenants, check the leases, make sure the property's okay. You know, but yeah, I mean, listen, let's say that it is a good deal. I'm not trying to talk you out of it. Let's just say that it is a good deal. We can give you a commercial loan on that property. And the way those work is they'll lend up to 75% of the purchase price. So if the purchase price is $350, the bank will make a loan, let's just say for $275. So that means that you have to come to closing with the other $75K. So you put $75K, the bank partners up with you, they'll put $275, and then you can buy the property, and you'll get an interest rate around 5%. And then you pay the bank back, and then you make the profit on the rent. If it's paying rent of, $15,000 a month, you pay your mortgage back to us for $3,000 a month, and then you pay obviously your taxes, your insurance, your maintenance, and then you profit the rest. So that's how it works on multifamily investing. So anyway, yeah, that's a great question. We can help you more to get you funding for multifamily. You can always call or text us at 832-431-6331. We want to help you out with investing in multifamily. Yeah, call us this week. We appreciate all of you guys watching the show and channel. We'll be back this Thursday, 7 p.m. Central, for Talk with Angelo. That's going to be the last Talk with Angelo for the year, I believe. I may have another one starting the process next week, the 5 down construction. Awesome. Sounds good, Gianni. Yeah, reach out to us. We appreciate you. I got an FHA 3 years ago with help. Yes, you can get another FHA. Carl, if you sold your last house with FHA, you can get another loan with FHA. You can constantly rinse and repeat and keep going. You can definitely do that, absolutely. So, we'll be back this Thursday, 7 p.m. Central, the day before Christmas Eve, to do the next Talk with Angelo. Don't forget, we do 4 podcasts a week, Monday, Wednesday, Friday, Saturday. You can go to our YouTube channel, Angelo Christian Mortgage, our Instagram, Official Angelo Christian, our website, Official Angelo Christian. We appreciate all of your help, your support. Please share this information with the world. Let them see who we are, what we do. Call or text us for funding. It's where America goes for funding for the last 20 years, guys. 832-431-6331. I do got to do the giveaway. Remember, we do the gift card for Amazon. If you guys give us a 5-star Google review on Amazon, we'll hook you up with an Amazon gift card. So you can Google Angelo Christian Mortgage. Text me your review to 832-431-6331, and we'll email you a free Amazon gift card. All you got to do is give us a 5-star review on Google. Angelo Christian Mortgage, give us a 5-star review. We'll hook you up with an Amazon gift card. Just text me. We'll check to make sure that the review's there. It's 832-431-6331. So we hook up all of our subscribers, give them free Amazon gift cards if you like Amazon as much as I do. And all you got to do is give us a 5-star review. Say, hey, Angelo, check it out. I gave you a review. And we'll send you the money. And then we also do a bonus Amazon giveaway. So for anybody, we ask a question. Whoever answers the question correctly first gets a free Amazon gift card from us. So I'm going to ask a question now, and all you got to do is answer it first. Whoever answers it first correctly wins the Amazon gift card. So the question for the winner for the free Amazon gift card is, how much is the new FHA loan limit for 2022? FHA just increased the loan limit for 2022. I said it at the beginning of the show. How much is the new FHA loan limit for 2022? Who remembers that? Who was watching the show in the beginning for FHA? That's conventional, Gianni. So for FHA, what is the FHA loan limit for 2022? Who remembers that? Who remembers what it was? Whoever answers it first correctly is going to win the Amazon gift card. Who remembered what it was? I said at the beginning of the show. Does anyone remember? Can anyone remember what I said in the beginning? For the FHA, that's close, Brandon. That's close. That's pretty close. Does anyone else remember the new FHA loan limit for 2022? You got it, Ty. Carl and Ty got it. Great job. Great job. Okay. I'm going to give all you guys a gift card tonight. No, Charmaine, it's not $325. It used to be $356. Now it's $420. But we'll hook up Carl. We'll hook up Ty. We'll hook up Brandon. I do want to get a review from you from Amazon or from Google, and then I'll hook you up with an Amazon gift card. Just text me at 832-431-6331. Send me your email. I need your email address and your Google review to give you the Amazon gift card. So if you can get that done tonight, we'll send that gift card out to you tomorrow. So we really appreciate all your help, your support. Don't forget to give us that review on Google, and we'll hook you up with that Amazon gift card. Congratulations, guys. Merry Christmas. I want to wish you guys a great holiday with your family. Eat a lot. Spend time with your family. Have a great time. Enjoy life. We'll see you guys next week. Take care.